Alright, VSTM. I don't know, I had that one on my radar. Verastem Inc. on the NASDAQ. And I just popped open the chart and guys, looking good. Alright. With no further ado, let's do the monthly candle chart. Scoot that over, create some black space all around. Define or see where my monthly defined support is. See where my monthly defined resistance is. I'm putting it here because I'm just looking. I know that it was right here. There was a breakout, monthly defined candle breakout right there. And look at here. I'm also identifying walls. Wall is previous support turn resistance or resistance turn support. So just to know that there's going to be some potential resistance here on the weight target, just to anticipate if there's a pullback, then on the weekly, you know that the 730 level, you might have a pullback there. If it's on low volume, it's good. It's a simple correction, simple pullback. The price action is going to go back down, then go back up. But if it hits that resistance line and goes down hard on hard volume, increasing volume, ouch. All right. What else do we have? Remember, patterns within patterns. You have a nice tight pattern. Remember the monthly candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 months. 11 months to resolve. Targets of patterns. Implied measure moves. Oh, see, it already reached that target. Bam. Didn't take long, eh? Monthly candles. Breakout candle right here. Target reached following month. And now let's just see what's going to happen. Are we going to get some more candles here? Some tests. All right. But now why I look at the monthly is to know if I have the monthly trend in my favor. And I know that it is because of this consolidation pattern, this breakout. Targets reached. We might have a slowdown around the 730 level again. 730 level. And that's what we have to watch out for. So let's zoom in on the weekly and do some Stan Weinstein stage analysis. All right. Scooting over. If I'm above the green, I'm in an uptrend. That's my Ichimoku defined support. So I get to remove those two lines, destroy that. And what do I have here? Let's remove. Oh, look at these volume candles. Look at that. You could almost guess the breakout line. Right here. Is that candle right there? RSI going through the halfway point, going up. Above 30-week moving average. What's not super duper at this stage that we don't have played the 30-week average. You see, it was still going down. Stan always says a 40-50% move before you even get in. Make sure that you have a break. This is like the first breakout. Then you get another breakout. And then another one, a burst. Breakouts or bursts. And then they pull back. Contracting bursts go higher than the previous high. And then right after the burst, there's the pullback. I don't know, call it profit taking, whatever. So that's what you have to expect. Don't expect the breakout to go and just to the moon. It could, but usually this is the pattern. Breakout, burst, and after that, the following 1 to 3 months, there's a pullback. And that's what you're going to look for, these pullbacks on contracting volume. And eventually what happens with those higher highs, it just skews the 30-week average. You see how it's going up now? And that's what you want. You want the trend in your favor. Always a trend. It's going to avoid you whipsaws if something's weaker, for whatever reason, but the trend's going up. It's going to save you from getting triggered out from too much of a violent move in the opposite direction. See, look at that. Look at that. Another one here. And then the volume kept picking. Oh, not this one. That's a weird candle. When I see candles like that with high green volume, but it's just the price. It didn't close like convincingly, like long Marabuzu candles. What I like to do sometimes is I drill down on the smaller time frames to get a read on the green candle, the green volume. Is it on? Let's go in. Let's say 1 year daily candles. See, it's a green candle, so most of that volume, it actually was, okay, that's what happened. It gapped down. But after that, the volume just crazy picked up. And after that, that's what we see here. On the green candle, a lot of green volume right here. And then after that, price action went back up, continued. So that explains the doji candle, or the spinning top, where that was just barely green on the weekly with a lot of volume. So, because imagine that price could just be a little lower and that candle be red, and you'd have now a red candle with a lot of volume. So if you want to really know the health of the distribution of the volume within that higher time frame candle, drill down. That's an advantage of drilling down. I often talk about higher time frames for the trend, but the drill down gives you this explosion, this detail, and then you get to see, okay, I'm good. This is very constructive, very positive. Then after that, what you do is you go back on your weekly chart, and then you continue. All right. Right here. And after that, contraction. See it pull back on this candle, red, green, red, green. This is the lull, the V shape, the bottom on low volume. And after that, just continues, just explodes. And is that where we are today? I think so. Let me just zoom that over here. Here, another milestone right here. Breakout. Continuation, breakout. Right here. It actually happened. Even with these two volumes picking up here. And guys, that's how it is. Look at the 30-week average now. Actually, you don't want to get you want to get in on that second or third breakout there. Bam, explosion, pull back, contracting volume, bam, explosion. And right now we just had it right here. And now just continuing off. Remember, at 730, that's that next resistance we might get. So you could enter here. Sell stop right below this pattern here. This takeoff pattern. And you could probably it's probably going to ride here 730, and then maybe pull back all the way down here to this 540 level, breakdown level, the breakout level. Sorry, on the supported volume right here, twice average volume of the previous 4 weeks. Yeah. And after that, if you have that, then you're going to go for another retry of that 730 level, which is going to make that bigger pattern on the monthly. Did I have a target for that? No, it's just going to hit here. And then after that, you're going to see if we're going to go through how the chart's morphed. And if that's going to make you, if you're going to get a bigger pattern. Maybe. Targets. Add it on to breakout lines. Send the price action to previous highs, previous resistance. Morphing the chart, giving you new patterns to look at. See right here, and identify another resistance starting here, and then you have all this range of resistance. So even at 1018, 10 level, that's monthly defined resistance. What's going to happen on the weekly is what I drew here. Let's go back on the weekly. Same thing could happen. Pull back, go through that resistance. And when we hit that other level, 1018, pull back. Look, this could be, somebody could probably draw Fibonacci lines and they'd probably match up. That's why I never Never judge somebody's system as long as they explain to you that they have risk, money management, and if they say they have emotion management protocols, and say, okay, you're good. You're good. There's lots of overlap. Whoa, look at that. It's crazy. Lots of line. So you see Fibonacci, let's say the price action goes all the way to 1030 right here. Here, that's a classic 38% pullback right there where we defined that 730 level. And where's the other one? That's a 50% one. And here's the good old fashioned 60%, 61%, almost close to where we had our breakout line. So look, I don't know how to explain that. I'm not a mathematician. I'm not a specialist in psychology. Do have some background in it, but I read up on Fibonacci sometimes, and that's like a rabbit hole. I said, oh my God, that looks so much fun, so interesting, great, makes great conversation. Fibonacci patterns in the real life, how it represents in nature, and how that transcends to human in our behavior. We're appealed by it, and it just the price action of charts often figures it out and does the same thing, as you can see here, right? I just drew here, and then some of the levels match. So I'm not so close, but so don't judge. If somebody has risk money management protocols, you're set. After that, it's all a question of applying that to your protocol, to your framework. Man, this looks good via vstm. You could enter now, put your sell stop down here, close to that below the round number, below $5. And then after that, you could play the pullback at the 540 level, where I'm going to put an alert right now. That's so messy, guys. So if ever there's a pullback, it goes right here, goes down here. I get triggered. If it's on low volume, I'm in. Win-win, guys. Cool vstm. And look at all these lines. Oh, I'm scared. All right. Ciao, guys.